this is just going to be a really quick video back testing the stock, and I'm just going to do a lot of things that I feel like value investors would do when looking at stocks. So the earnings we're looking at Carnival Cruise Lines first. Carnival Corporation first. And so we're going to look at the rewards versus the risk. So the rewards are the earnings are forecast to grow 107% plus per year, which, is not realistic. One bad thing for a value investor is that the shareholders have been diluted in the past year. It's highly volatile share price over the past 3 months, and the interest payments are not well covered by earnings. So we are going to scroll down so that we can actually see kind of the debt to assets. So we know that we see that the share price versus fair value, it is very overvalued. Actually, this stock is my least favorite one. Okay, so I have been doing like 1 hour of due diligence on each one of these stocks. I'm showing it today. But I bet there's probably more than you have done. But anyways, that's kind of a little bit about it. But we want to scroll down to see the not the past performance, but the debt to assets, because with these companies, we want to make sure that their debt is not too much than their assets. And we see in the short term, which is really short term. And if you're a short term investor, you're not going to want to invest in this one. The liabilities exceed the assets tremendously. But in the long term, the assets exceed the liabilities tremendously, which is going to be really good for value investors who are looking to invest 10 years plus. So now we're going to look at Royal Caribbean Group. So we can see that the rewards is that it's trading below 62.7% below the fair value, and the earnings are forecast to grow 83%, which is not as good as Carnival. The debt is not well covered. It's highly volatile. The shareholders have been diluted. So it's kind of the same thing for the risk. So if you're looking at the risk versus the reward, the other company, CCL, looks better as far as the rewards. So if we scroll down, we're going to actually see the valuation. So the fair value is $175.35. And my mistake, actually, this company has a better reward than Carnival Corporation. So it's 62.7% undervalued. So that's how much of an upside it has. So now we're going to look at the debt to assets to see how good it is financially. So its assets cover its liabilities in the short term, which is really good. And the assets cover the liabilities in the long term, not as much as Carnival Corporation does, but at least recover the short term and long term. So I like this company better than I like Carnival Corporation. Now let's look at Norwegian, however you pronounce it, cruise lines. So we see the rewards and risk, same risk as all the other companies. So you're seeing that all the other companies have the same risk. Okay, there's nothing different from it other than there's nothing really different from it. Okay, so the rewards is that it's trading 41.8% below its estimated fair value, which is not as good as it for a value investor as the other companies. But remember, we're looking at the overall thing. We see that the earnings are forecasted to grow 91% plus per year, which is better than Royal Caribbean's, but only a little bit worse than Carnival Corporation. So now we want to go look at how much its value is. So it's 41.8% overvalued. The fair value is $27.93. I like that it's really cheap because it's easier for us to get into it, just like Carnival Cruise Lines and unlike Royal Caribbean cruise lines. So, but that also could be a bad thing for unestablished investors who just have maybe $100. They can invest in this stock and just things like that. It's easier to short. It's easier to do those type of things. So we want to scroll down to see its debt and its assets to see the financial health of this company. And with that being said, remember, I am not a financial advisor and this is not financial advice. This should just be taken for entertainment purposes only. So we see that their assets cover their liabilities, and in the long term, the assets cover the liabilities as well. So now we're really left with two options just from looking at this: Royal Caribbean Cruise Lines or Norwegian, or however you pronounce it, Cruise Lines. So if you look at it, in the long term, they both look pretty good. In the short term, but they both look pretty good. I like how this company's liabilities are one of the lower than Royal Caribbean. I believe way lower than Royal Caribbean lines, but their assets are way lower as well. But the assets, if they have really good management, that shouldn't be a problem at all. So their liabilities exceed what people think it should be. So I think a lot of people think that these companies, cruise lines companies, liabilities are really high and their assets are really low. But this company actually, its assets exceeds its liabilities in the long term and short term. Guys, make sure to hit the subscribe button, comment down below for the YouTube algorithm. But we're not finished. We want to backtest this stock, and we're going to see a little bit like who stayed the longest, who has survived the most dramatic and drastic impacts this world has given us. So we see Royal Caribbean Cruise Lines. It was incorporated in 1985. We see that Carnival Cruise Lines, which is really not a contender at this point, was founded in 1972. And we see that Norwegian Cruise Lines was founded in 1966. So we're not really looking at Carnival Cruise Lines. They're the second best as far as when it was founded. But Norwegian Cruise Line seems to be the oldest company, and it has been around the longest. So out of Norwegian and Royal Caribbean, so far, Norwegian, however you pronounce it, seems to be a way better company than all the other ones. But now we are going to do the true test. We're going to back test this portfolio to the Vanguard S&P 500 ETF. With that being said, make sure to subscribe because this video did take kind of a long time to create. So, if we look at this, we're looking at this back test portfolio thing. We see that Royal Caribbean Cruise Lines is done the best in the past, but we're looking at the future as well. Well, in the present right now, Royal Caribbean Cruise Lines seems to have recovered the best and is doing the best, whereas Carnival Cruise Lines and Norwegian Cruise Line seems to be doing the same thing all of the time. And if you look at the past, actually, Carnival Cruise Line have seemed to do better, seems to have actually done like the same as Norwegian Cruise Lines. So out of Carnival Cruise Lines and Norwegian Cruise Lines, I still pick Norwegian, or however you pronounce it, Cruise Lines over it, because we're not just looking at the past. We're also looking at the future based upon what we see now. And right now, in the present, Norwegian Cruise Lines is doing worse as far as recovery and things like that. I mean, not recovery, but like right now. But I still do really like the Norwegian Cruise Lines. But we need to look at Royal Caribbean Cruise Lines because its past has looked pretty good compared to the other ones. And I think that's because they target more expensive or high-class clients. Well, high-class / middle-class clients. So now we're going to look at the portfolio returns. The best year for Royal Caribbean Cruise Lines is 76.94% gains. Whereas the second best one was Norwegian Cruise Lines, which is my favorite, but also the worst year was negative 70%, and the worst year for Royal Caribbean Cruise Lines is negative 47%. So based upon all of this, just the back test of the portfolio, it seems like Royal Caribbean Cruise Lines is the best, but we want to look at the other things we saw. We saw that their assets and the liabilities are pretty much the same as the Royal Caribbean Cruise Lines. But if we scroll all the way up and we're looking at all of that, we see that it's trading 62.7% below its intrinsic value. And we see this one's trading below 41.8% below its intrinsic value. And their health seems to do a little bit better than Royal Caribbean Cruise Lines. Royal Caribbean Cruise Lines past seems to be doing a little bit better as well. And their earnings are supposed to grow about 80% or 83%. This one at 91%, which we know per year that's kind of fake. So which one is better? At first you were thinking, I was kind of tricking you into thinking Norwegian Cruise Lines, but to be honest, Royal Caribbean Cruise Lines looks to do best in the future. Now, Norwegian Cruise Lines seems to do better as far as health go, if we're looking at that. But as far as future growth and health and like overall everything, so far it's Royal Caribbean Cruise Lines. So if you really did like this video, if this provided you with some good content, make sure to subscribe. And based upon all of this, it's looking like Royal Caribbean Cruise Lines or Royal Caribbean Group seems to be the best stock to put your money in if you're looking at cruise line stocks who have suffered drastic losses as far as the their finances go. So if you go look at the balance sheet and things like that, it's going to look horrible. But to find out any more information you want to find out about these companies, just go on YouTube, find more videos, or type in the company's name and type investor relations behind it, and you can find all those things you're looking for. But guys, make sure to subscribe. Just demolish that like button for more videos on stocks in general. So I'm just a 13-year-old. Like I said, this is not financial advice. I am not a financial advisor, but I'm just trying to give you my input on stocks that I feel will give you a lot of good information. So if you really do enjoy this or any content I have made, make sure just to demolish that subscribe button, demolish the red guts out of it. That would be amazing. Thank you for watching to the end. It truly does mean a lot. Thank you so much. Remember, this is not financial advice. You need to do your own due diligence. This is just my kind of quick evaluation and just a quick video based upon all the research I have done, which is only 1 hour of each stock. So that is not a lot at all. You need to do at least 24 hours of your due diligence before you buy. So that's what I have for you today. Make sure to subscribe, hit the like button, and comment down below for the YouTube algorithm. But that's all I have for you.